Okay. All right. Let me just check this here now. Okay. Sorry, guys. Just bear with me. Need to make sure that this works properly. All right. All right. It looks like everything's working here now as it should, as it was intended to work. All right, guys. So, yeah. So, everyone is looking for a bounce. At least it seems like that's what the case is. Um, I just want to give you guys an update. So here in a few hours, Niels is going to come on and do a presentation on how he trades the open. So look out for that. Oh, that's tomorrow. All right. Sorry about that. We should be getting Rich Handle stats coming in here and talking about his stat based approach. Let me just check with Danny to see what time he's coming on. All right. So more importantly, back to the tape. So here we are. We're about to test yesterday's low at 65 at 66.54. The overnight mid is 66.56. So obviously that becomes the first, this area right here from 66.54 to 66.64, which is yesterday's settlement, is going to be stacked. So that won't be an easy take for the Bulls. And if they do take it with strength and momentum, then that's a big tell for us, right? Because on any pullback, we would expect that to hold. On my stuff, the real test is if we can get over the 66.55 area. $66.50 to $66.55, which was a support on the way coming down. So I'd like to get a shot at that. I'm still not confident in the low of the day is put in here yet, though. That's what's going to give me trepidation about any move. So I would want to see something get over this area here and then come back up here. But I want to see a thrusty move through here. So far, we're getting that, right? So far that we kind of have that look here where it kind of has that opening drive look. We have 3 15-minute prints coming up strong. We have a strong 60-minute print and no signs of relenting in the momentum here. So let's keep an eye on that. I think we had so here, this is also something to take note of, right? We also had a divergence here, right? You can see that here in the RSI, which was to be expected. And I think somebody in the room pointed that out. But again, I think that I'm not sure that these lows are secure. And it's really a sell the bounces tape all week, right? So typically when we start to get to this point in the week, right, it's important. I typically start off in the morning and I'm looking at the weekly bar, right? So I'm looking at the weekly print to see what it's gonna form as, and it kind of comes into play when you get to these when you get to Wednesday or Thursday, because typically what you're going to see statistically, the highs of the week and the lows of the week have a greater probability of being formed on Tuesday or Wednesday. And that's a dynamic stat. But look at this weekly print, guys. You know, this weekly print, we've had two selling tails come in. And so if we can get over the open of this bar, I mean, maybe that's something that might give us a sign. The open of this bar is 66.85, right? The open of this one is 66.59. That would kind of flip this bar to a green bar, and would but thus far these tails are telling us that sellers are active. And yeah, there's going to be, of course, there's these sells always come right before a rip your face off rally. And I know, at least my plan is to try to be long on that rally. But also to not give up so much profit trying to nail the move. Right. So I want to be, and so if that comes, I'm not going to catch the bottom. I never do. I don't even try. So what I typically want to look for is something that, where we get a move, where we come up here and kind of form a base where we form some acceptance, and then look for that move higher where I'm entering later in that base. That's how I try, at least for me, I don't want to give up too much of my profit, guessing, because, right here, let me show you. So this is a 2-hour chart. Show you here. Even here on a 15-minute, right? So you see how these balances form? Like right here at support, right? It comes in, it tests once, it rallies, and then it comes back down, and then it holds again. That's a key tactic for me, is to enter on the second touch of that support bar after a balance forms, because typically what you're going to see is some absorption, retest of the level to make sure it's good. And so I don't want to enter here. I want to get in here on the second touch, and knowing that I might get a third test, right? Depending on the level, I might get a third test. So being mindful of that, we can already see we're getting some rejection here from the level I highlighted earlier at 66.50 to 66.55. We saw the same thing yesterday where the support buy became the resistance short. And that's been the modus all week. Okay. With that said, let's take a look back now at the more granular look. Okay, we have 17 contracts traded at the high. And, for the high, we're not really getting that taper that we like to see. Gosh, if we would have traded up here and up to this previous low, 66.54.50, I think that's a good chance. With you could take a shot there, and then maybe go in with micros and test it at 66.54, and then add if it goes up to the settlement, knowing that that's typically a first touch fade, right? At least that can get you down to maybe a first target. I think that also, like, it's going to be good for when we get different contributors to come in here and kind of share their approach, like Neil's, because I tend to be a little bit more, of a planner. And that's, I fully understand that that's not the way a lot of people like to trade. A lot of people like to trade, more off the cuff, look at their charts and make a real-time read and execute on that read. um I can only offer what, the way I do it. I had some trepidations about jumping on this initially because I was telling the guys that, I'm probably one of the more boring traders that are out there. All right, so we're seeing that fade coming off of that level 66.51. It couldn't even see. And this is key though, guys. Right here is that, yesterday the price isn't really even making it fully to the supports. It's getting halfway there, or it's getting like to within 2 or 3 points or 5 points of it and fading. That's not a strong market. I'm not, I'm less inclined to buy dips unless we get a good sweep. And look, every sweep has been dying. You're seeing that right here, right? We get 2 15-minute prints, and then immediately we're getting rejected. So, as David likes to say, as I was just going to quote you, David, as David likes to say, stay in alignment with the dominant forces. And so far, look at all our moving averages, right? We're below VWAP. We're below on the 15-minute. We're below the 21, which we just traded, which is always a fade, or a buy if you're testing it from above. And so far, the dominant forces are the bears. The bears are fully in control here. They're going to run into some problems, though. We can see that on the daily chart, right? Coming into these levels here, I mean, let's just talk about that, right? Is it possible for the bears to finally complete the moves where we see a print, something like this, right? We still have 2 days left where we leave this long tail. I don't know. You guys tell me, what do you think? Coming up to 66.54, testing that higher band, the higher area of the early high. Let's see. Oh, yeah, we're good. We just breached it. We just had a news drop. Yeah. Yeah. I guess it didn't matter. I mean, this is pretty much the dominant headline, though, right? Check this out. Dow falls nearly 800 points after Powell makes one thing clear. There's no rush to rescue the market. Okay. I'm a little bit apprehensive about, who the next Fed chair is going to be, because Trump probably puts fills the position with another yes man, and who knows what that brings. All right, so that 15-minute print, that 15-minute bar reversed on us, and it's printing higher now. We're going up to test that 66.55, yesterday's low, 66.54.50. Just above that, we have the overnight mid. And the overnight mid is at 66.56, and with the settlement just above that at 66.64, you can already see how we're seeing some signs of rejection, right? We have big wicks forming at the high. I mean, that's, gosh, if I wasn't on stream, I probably would have sold that. I think maybe I'll switch to trading micros on the stream. This way I can probably execute. It's going to take me a bit of time, because like so just to let you guys in a little bit on how I trade. So I usually have my areas, and getting in at that area, I feel like, in order to avoid the unnecessary stops, like there are times that I have to take a trade twice in one area, and then that just kind of eats into the profit when you're right. And so what I like to do is once we get to an area, I'm looking for a delta divergence at that area, right? And I'm looking for that kind of like that taper look. But all that's to say is that I pretty much I dial in heavily to the dome once we're at that area and kind of get a feel for the price action. Now, what the one thing you can't do, and don't make this mistake like I have, is stare at the dome too much. You need to kind of tune it out when you're in, like no man's land, and only look at it when you get to the area where you're considering doing business. And guys, that if you understand balance and you understand that price doesn't move in a straight line, that'll cure any any tension, or help you with pulling the trigger too early, and also help you with patience, right? Because how we're looking for a balance. I'm looking for a balance area. I'm looking for that delta divergence, and I've done it enough times and I've gotten it right to know that, hey, when I nail it right, like there's no waiting. The trade goes, it moves in my direction, and I'm right. Instead of me, like for instance, and I'm discussing it here, but say I sold it here, and then I have to sit through this, right? You typically want to get in like on the move down here, and then all of a sudden you're at a first target. You got some breathing room. Your theoretical stop can be tightened up quite a bit. All right, so our regular trading hours mid is at 66.33, right? Our opening price is 66.29 quarter. So what's the expectation? The expectation is that we come back down into the regular trading hours open. We get a little bit of a bounce and then see, does that bounce turn into a new high or a retest of the high? Or do we cut right through that, right? Do we come down to the open and then cut right through it? I mean, that's typically a sign that you want to get short that. For scalpers do a lot better because they'll be able to just jump on a move like that and capture, 2, 3, 5 points on that move through the open. This was technically a look below and fail at the open of the overnight low, 66.16. So if you took that here, 66.21, you got up to 66.51. That's a 30-point trade. That's your day right there. I mean, that's with perfect execution, so on and so forth. But even on 30-point move, it's relatively easy to extract. 10. Get for me would be, three scales: 5, 10, and 15. Bear with me, guys, while I take a look at this email here. Just flashed by. Hang tight, guys. Got to get the door. No, ustedes tienen que acabar primero antes de poder entrar. No, no puedo decir contigo. Ok. Pero me parece que cuando yo llegue, yo voy a estar trabajando. Ah, ok. Voy a empezar por aquí. Ok. Entonces yo te abro la puerta del lado, quiero mantener el garaje cerrado porque me llenan como. The kid offered to keep it open. Just because one of your kids offered to keep it open. Okay, yeah. So I'll leave the side door open. You guys can come through here. That's fine. Just leave the door out. Vamos trabajando primero afuera. Después vamos por la. Yeah, yeah. Yo te abro ahora. No. Anyway, so let me just finish up. I'm gonna only be on to 11. And then I really don't want them to get too much of a told them to. Yeah, guys, look. So that 55 area held. Sorry about that. I had to step away to answer the door. My AC guys are back. So that 66.55 area held as resistance. Remember, we outlined that as a support buy come on the way coming down right here, but that turned into be, just like yesterday, right? I think yesterday's, what was yesterday's? I think it was 66.75. Hang on, let me check. Oh. Yeah, so yesterday was 67.75, 67.55. That was support. I remember because I traded that one for 15 points on the bounce, and then my runner got stopped out at break even. And so we're seeing a lot of the similar price action today, right? Where the supports become resistance, and bears are showing up at every minor support. I mean, a minor resistance, right? They're not even typically like when I draft my trade plan, I typically put, because I tend to stay, ES tends to move higher more than it moves lower. So I typically have more bullish setups than bearish setups because I want to kind of give myself that advantage of staying on that side of the tape, because probability suggests that that's going to be the better side to be on. I'm called Manny Trends for a reason, because I like to stay with the trend. So, but what we're seeing here is that these resistances, they're not even like, typically when I draft a plan, I'll have two resistances, and I won't even fade the first one. Like for myself, I'll put it there. But typically it's the second resistance where I'm either scaling out, or that's the one that I'm looking to maybe fade if I didn't have anything on that day. And that's just a hallmark of like kind of like the ES over the last, I don't know, 6 or 7 months. But now what I'm noticing is that We're in this dealers are position short gamma rallies, just like I highlighted here. Rallies continue to be sold, and they're not even letting it get to the second resistance, right? It's they're just taking it at the shortest resistance, at the closest resistance, and we saw that here on the 2-hour chart, highlighted right here, right? This was the first, this could have acted as a resistance here, right? That was what the bulls' need was, but they couldn't even get past this low. So again, I think that we're in for lower prices today. The low is not good. I hope I kept you guys on the right side of that move. Or if there was plenty of alpha to catch right here in this move. I mean, this was 66.11 to 66.51. That's 41 points, guys. You can make your day in that move if you traded it right and you're disciplined in your execution. Right, you could definitely have capitalized nicely on that. So here's the thing. Let's check out the context, right? Let's see. I mentioned it before. I mentioned it when I was doing my homework. Let's see. This is what my focus is now. Okay, so look, if 6620 support fails, which we got the initial, so we got the bounce off of 6620, right? We got the bounce here. We overran it here, but then it reclaimed right here, right? 6620 definitely had efficacy. But if 6620 support fails, it's a beeline to 6550. So heads up on that, guys. Heads up on that. And the reason for that was, here, let's show you the thinking behind what went into that. Here's 6650, right? This is 6650. Zoom out a little bit. Wait, let me get the right contract here. $66.50, right? That puts all of these longs on notice, right? All of these longs here are on notice, and there's not going to be a lot of, if you look at the composite shows this is very, very thin down here. So that call was based on the composite of this move here, showing just a thin part where there's not a lot of inventory, and I don't think price is going to have much of a problem beelining. Once we get into some problems, there's down here next to 65.50, next to this area and this area here. So I think that's on deck for today, guys. Watch out for that. 65.50 should bounce it. But let me see if I can find a way to get in on this. I'm hoping some of the other guys get involved here so I can actually get some trading in. 66.39. Right? The idea there is that we fill this fair value gap right here, this 15-minute gap. We fill that and we kind of get rejected right from this point, right? And then if you go in 66.39, you can kind of control your risk, right? Where your stop then becomes a couple points above this, so 66.45. I like that idea. See what is that low? That low is 66.40 quarter. So front run it by a point. Front run it by a point. So 66.39 quarter. $66.44 stop. So you're risking 5 points. That's not too bad. Also, look at what you have here, right? You have the volume point of control, today's volume point of control, yesterday's profile, volume profile is super thin here, not much volume in here. So you have this holding you down. You also have these low volume nodes in here. Hang tight, guys. Also, we're anticipating a low coming in sometime in the next hour or so. Yeah, let's take a look around and see what's going on the bigger stuff. Let's take a look. Let's take a look at the big board. All right, guys. So internals are 1.5 to 1. The advanced decline, what the difference between this advanced decline and the weighted advanced decline is that the weighted advanced decline is measuring from the open. Okay. So, but we have a divergence in that our ticks are negative. Our ticks are negative. Cumulative ticks negative, and more ticks are negative than positive, with the high tick of the day coming in at just under 500. Let's see what else. What else we have to look at here? It looks like crude is in this extended balance area now, hovering just below that 98. Nice, good job, Luca. Congrats on that. Yeah, it looks like that fair value gap did not hold. Bulls could be digging in here, guys. Bulls could be digging in. Right back to the highs. Yeah, that's a pretty interesting 15-minute print. That means our 6620 support held again. So that's been one, two, three times it's held. I mean, I guess we overran it here, but I don't think that you can consider that, a real an overrun because it just wicked and reclaimed it. This is just too important an area for it to go easily. I have a strong, with the weighted AD being positive, guys, that kind of changes the picture somewhat. So that's definitely something I've seen a lot in the past, where the indexes are kind of are red, but the weighted AD is showing strength, and we can see that here. Let's check out just check have a look at our sector or each sector. Okay, so look, check it out. Infotech is green. Dang, that's too big. Infotech green, healthcare green, consumer discretionary red, communications green, financials, industrials, and consumer staples red, real estate green. So we have 1, 2, 3, 4, 5, 6 sectors green to 1, 2, 3, 4, 5 sectors red. Mixed bag there. Mixed bag. You guys can see my screen? Oh shit. Dang it. So you guys, okay, so of course, right? It never fails. Oh shit. Thanks for bearing with me, guys. This has just been one one tech issue after another. Yep, it won't share. Dang it. Is it there now? I'm not seeing it on my screen. That's the problem. Okay. All right, cool. All right, so this is what I was highlighting earlier, was that we can see here that the weighted AD is positive today, right here, right? Weighted AD is positive, even though AD is negative. It's at 992. It's kind of been moving up since the open, so that's definitely something that you can't get you can't get too bearish on, right? More stocks are rallying from the open. We can see that here in the sector list too. This is what I was kind of highlighting before, was that we have technology green, healthcare red, consumer discretionary red. So we want to see those in order for the S&P to rally. You technically want to see defensives red, right? We have communications green, but financials, industrials, and consumer staples are red. Real estate's green, utilities green, energy's green, and materials are red. So we have 1, 2, 3, 4, 5 sectors green. 1, 2, 3, 4, 5, 6 sectors red. I don't think we can read too much into that. Internals are firming up quite somewhat at 1.6. They were just 1.9 to 1 positive, negative, sorry, 2.2 to 1 negative on the NASDAQ. You can see here that 6650 is a problem. We can't get past it. You got to think that there are some bulls, right, that are looking at this at the bottom of this range, buying the bottom of this range, right? It kind of makes sense. Getting long down here, swing positions. I wonder what Trey and the swing guys think about this, right? This whole band down here would be, I mean, you can start, if you start building your position down here, you're a swing guy. I know one swing trader who's adding at 25 and 50 points. So, not a day time frame guy, but he'd probably be getting buying in here and then 6,600, right? And then adding at 6,650 and 6,500. It's always good to know how other people trade the market and how they approach it. I'm always fascinated by swing guys and their ability to stay in positions and hold positions. I wish I could do that more. It's larger risk but larger reward, I guess. But I feel like when you have a day trader mindset, it's harder to hold positions to their target, right? So maybe you execute one properly, but in order to make it work, you have to kind of execute like a year's worth of those trades to really reap the rewards. All right, let's see if that 15-minute tail holds true. Sorry, guys, sorting out some client issue here. All right, let's check out what we have. Price is trying to eat into that tail now. Price is eating into that 15-minute tail, so look out for that. That's gonna target the high of that bar, which is 66.50. So we're gonna get a retest there shortly. Those are great, easy scalps, guys. Look at that. That's a cool little trick trade, right? You get a 15-minute print, right, with a long selling tail. Next bar opens. It doesn't even test half of the previous body and immediately starts to eat into the tail. You can scalp that right up until, a few points below the high of the previous candle. So target on that would be, let's see, 66.49. And if you even if you caught it late, 66.39, 66.40, there's going to be 5 points in that at least. Jeez, is that real? $1 billion for the perfect bracket. I mean, but what the odds on that are ridiculous, right? What's the bet, BD? What do you have to lay out for that? Wow, that's interesting. All right, guys. I'm about to sign off here. I sold those 39s. I still have a couple of those left. They're not looking great right now, but we'll see what happens with those. One of the things that I want to share with you guys is, it's kind of like, so my style of trading is a little bit more measured. And for a long time, when I was struggling to get profitable, I had to fight the urge to constantly trade, right? It was just like this mental urge that I had, that I needed to, the opening bell would ring and I would have this urge to be in a trade. And that was my brain wanting stimulation and action and resolution. And it was kind of when I would get bored, or when I was down money, you know, um, trying to make something happen. And it was when the switch flipped that I started operating it more of like more in terms of a trade plan, a business. Hey, I'm going to risk today. I'm going to risk total 30 points. That's it. Let me pick and sticking to that and developing that discipline, which took some time. And then knowing where I want to lay those 30 points out. Do I want to lay them out on one trade? Do I want to chop them up and lay them out in 3 trades? So on and so forth. It was kind of at that point where trading became less fun, less air quotes fun, but more methodical, and that measured approach kind of I had to work through it, but then eventually it got me to the other side where there was less roller coaster rides. It was more of, hey, this is what worked out today, this is what didn't work out today. But but uh but that, I hope that helps you guys out, because getting through that was important for me. And then on the other side of that battle was profitability and just less anguish. The ups and downs of trading. If you're going to do this long term, you have to kind of find some peace with it, so that you don't so that you're not carrying carrying the weight of or whatever implications a negative trade or negative execution had on your day, right? You kind of want to have that, leave work at work, and be able to to live outside of trading and enjoy a you know peaceful life. So for me, that measured approach was the best thing that I did, and I had to turn off that urge to want to trade constantly. With that kind of behavior is what led me to chasing, to forcing, anticipating, guessing, and the easiest trades are the ones that I just seem to like are like seem like the easiest ones. So, yeah. So I hope that helps you guys out. I hope I was able to, you know, keep you guys on the right side of the tape today. Bring your attention to that early high that we formed, right? Like at 10:15. It's now 45 minutes later, and we've done anything but breach that high, right? So um, keep that in mind. I think that I don't I I don't have any confidence in the low of the day being in yet. If I had to bet, I would think that um, that's going to be taken out. The most important thing is to just keep let's make sure that our behavior is in line, right? We don't want to fall into that urge or the negative outcomes where you take a low quality trade and it goes against you, and then you take another one to try to fix it, right? And then now then that one doesn't work out. Now you're being emotional, and now you're in a hole and you can't dig it yourself out, and now you're fighting the market, right? Let's try to stay away from that type of execution. Let's try to fear, guys. Have a great day. Trade safe. Be good.